Welcome everyone to the Kendall Report, where I share my 40 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Just want to give everybody a quick shout out that came to the live stream yesterday. We do them every Wednesday at 1:30 New York time. It was great fun. I would suggest, if you haven't watched that, to go and watch that first hour of the live stream. It's about 2 hours and 45 minutes long. I went through a lot of details that I can't do in these 12 to 15 minute videos that I do every day. Make sure you take a look at those. But as we look back on yesterday, we printed an all-time high at the 399 level, and we saw a reversal right after the Fed came out and released the minutes. Now, initially there was a positive response, and then the market reversed and just continued to sell off for the rest of the session. Now, there were a lot of things that came out of yesterday's sell-off that I've been discussing for the past two videos. I've been warning you that we're approaching a high, also that there were a lot of risks starting to emerge in the markets. The primary risk that I was seeing, that there was a strong possibility that we were going to see a substantial sell-off in our short-term database. Now, we covered 16,500 symbols. We saw a total of 1,400 sells, but there was a net versus the buy signals about 1,296. And I will go through all the details on the database here shortly, but this is the beginnings of something much larger. Now, originally been talking about a moderate decline on the S&P. It now looks like there's a possibility for something more substantial to emerge. It's a little early to call because I do not have confirmation just yet. I will go through a lot of details in tonight's technical section to unpack and to show you what the possibilities are here. And while just about everybody on the planet has been waiting for a turnaround, I think we have got it. It does appear that there's many things lining up right now that could spell trouble for the markets on a short-term basis. I'm not seeing any intermediate risk at this time, but I am seeing the potential for a short-term top, and I'll definitely go through all the details here in a few minutes. Now, the Fed minutes had nothing surprising at all, other than market participants chose to parse out the words like I discussed that they would, and they decided that the continuing risk of the economy was a big story that was unfolding. And this is what I've been talking about for at least 2 weeks on this channel. As we go forward, the metrics are going to start to look a lot different. We have unemployment claims coming out in the morning. They're expected to show under 1 million new claims. The number that I keep telling you to focus on is that continuing claims number. If we happen to tick down below 15 million and anywhere close to 14 million, that will be positive. But I think the sentiment turned fairly quick yesterday. This report could set the tone, as it's likely we're not going to see the continuing claims to drop a lot more than where they are right now. That's going to take a few more weeks to figure out if this trend from 20 million down to 15 million level is going to continue or not. I think it's going to stall here. That's going to create a different dialogue in the marketplace as far as market sentiment goes. Also looking at the VIX and some other elements that are starting to look very interesting, suggesting we're going to see some minor spike in volatility here. One of the other things I think are going to continue to cause issues in the markets, many of these high-level stocks that we're seeing are going to start to stall and go into broad trading ranges. The fact that Apple and all the FANGs are entering into this broad range, I talked about that in detail in the live stream yesterday. This is enough to set up a minor correction phase. Now, we could be looking at somewhere between 5 and 8% ultimately on this thing, but it's not going to be something that's going to break down the intermediate trends. As I've talked about before, we have a substantial amount of intermediate trends that have been recognized by our models. Those models don't change direction very easily, so they're going to continue to go with the grind, even if we set up a broad trading range at these levels. It's going to get more interesting as we finish off this week. I'll be setting up some numbers for us to watch for Friday's close. Give us a clue to the next several weeks. Let's take a look at the charts, see what they're telling us for Thursday. As we begin tonight's review of the WaveTech database, I'm going to discuss something I normally don't talk about, which is the VPM index here that is illustrated in this graph right here. This is a non-weighted index of around 6,000 symbols. They have a minimum capitalization of 200 million plus, but the index itself is a non-weighted index. All the other indexes that we're used to watching, the S&P and the NASDAQ and other indexes, are cap weighted. This is an equal weighted index, which gives a complete different look and feel from what we're used to seeing. And one of the things that's happening in this index is all of the patterns are overlapping, which tells me that this is all a major correctional phase. There's not an impulse wave, and that there is ultimately going to be a correction. As I mentioned in the opening comments, I don't believe at the moment there's a major correction coming, but I do see somewhere between a 5 and 8% decline coming. It's likely that it's already started. I've seen this index lead the way where it makes a new high and then the market indices follow, and then I've seen it diverge, and this is a divergence pattern suggesting that we're going to see a correction in the weighted indexes, and this index will do more of a consolidation and maybe set up a pattern that later will lead us to new highs. It's way too early to make that type of an assessment. As we look at the database itself, and I've been talking about this for the last couple of weeks, is that my expectation is we're going to start to see a substantial liquidation of the short-term database. It was at 76.8 yesterday. It is now 71.38. We saw a total of 1,412 sells. There were 116 buy signals between the daily 1.2 and 3.2 models, gave it a net sell of 502. I talked about last night that the critical level is going to be the 68% level on this meter. If that is taken out, we're going to see a further liquidation of the number of stocks that are bullish, which will suggest that the internals of the market on a short-term basis is going to correct. And many of these trends, as I mentioned in last night's video, that have extended or doubled their holding periods are going to start to see some liquidation, and this database should rotate back to well below 65%. We should see something like 40%, and it could even go much further than that, and we get a full reset of the short-term database. Now, I'll cover on Sunday night what's going on with the intermediate database, but there's nothing changes until Monday's action, and I don't see any material effects on an intermediate basis. This sets up a major rotation, which suggests that there's going to be a recycling of a lot of these short-term trends. As I mentioned several times over the past couple of weeks, this type of action is very healthy, as it is a reset and a recycling of a lot of short-term trends. And this takes somewhere between 4 to 6 weeks to unfold. So there's going to be a lot of work to be done. As I talked about in the opening comments, as I just mentioned, there is going to be some sort of correction set up here. We don't know as of yet, because there's not any confirmation of these things until we see a few more days of activity and see further liquidation. I suspect if we close flat to down tomorrow, we'll see many more sells come out of this database. Looking at the S&P 500 cash, we did see a pretty substantial sell-off, not huge numbers, but 0.44%, down 1493 on the session yesterday. We did print the all-time high at 3399.54. This all occurred right after the Fed released the minutes, and we just saw steady selling throughout the session. And we traded down. You'll notice that the STX number was 3373.06. We traded 3374.85. This was one of the first hits of the STX number we've seen. Now, we did print R2 and an STX down, so it's a big range. We saw an increase of the range yesterday to 29.88, and I talked to you about the volatility indicator yesterday, and it was at 1685. It ticked up to 2106. I thought we'd see an increase in volatility. I thought we might downtick in that index below 14. We didn't make it there, so we're starting to see an increase of volatility. So expect to see quite a bit of action as over the next couple of days as we come into Friday. Now, overnight, we did see the futures trade down all the way to its STX, which is 3344 is the low on the futures. It was exact hit. The STX number was 3344.25. We printed 3344.75 on the low. We bounced off of that. We're back at S2 right now, around 33.56, trading 56 to 58 right now. I suspect we'll go back to 63 and maybe print an R1 from here to see a 33.75. I don't expect to see the R2 print, so we'll see some sort of high on a rebound, possibly as high as 75. We may fall short of that, and then the range will be the STX, which we printed overnight, to the 33.75. Now the critical number tomorrow is going to be the 33.62 number. That is the 10-day moving average. I mentioned that in yesterday's report, and a close under that level will set the tone to move down toward the 21 period moving average, which is 33.10. There's also on the market grid, there is a number at 33.07. This is how this market's likely to set up for tomorrow, and the close tomorrow will be significant. If we manage to close above the 33.75 level, then that would be positive. Put something out on the Twitter account if I see anything that looks like there's some kind of shift from what I'm telling you right now. A close under 33.62 will be a negative signal, will suggest that we'll get at least 3 to 5 days initially in a downside. Reviewing the NASDAQ futures, you'll see that the low so far has been 11,221. We didn't quite make an S3 print. We're very close at 11,208 on the S3. Same thing here, probably an R1 maximum on the upside would be 11,356. And this overnight low is likely to be the low of this particular session. And I suspect we'll rebound at least back to 11,286, which is S1, but we should move toward that 11,356. Just like in the S&P, I don't see a print above R2. We could hit it, but I don't see it printing above that level. Taking a very quick look at the VIX index, we did see it close back above some key levels yesterday, finished at 29.26. If you notice these dots on the page, these are a cycle event. We had a cycle yesterday, looks like a cycle low. We could start to move back up toward the 200-day moving average. The 200-day moving average, which is at the 27.60 level, we get above that level, then we could see this little spike, which will coincide with some sell-off, possibly down to that 33.20 level, 33.07 level that I discussed in the S&P. So look for a pop in the VIX here, at least to 30 to 32 range on the upside. It may get more than that, but I don't see it going above that, at least at the moment. And that 27.60 200-day moving average is going to be a critical level. Reviewing the Dow index, it was somewhat frustrating last night. I covered 5 markets, but I had a crash of the software, so I literally lost all of the work in 5 markets and had to redo that section of the video. So that's why there was only an S&P and gold last night. So I apologize for that. I'm making sure that doesn't happen tonight. One of the things I talked about in the Dow last night was that I believe that we were at a low, and we did see a big reversal yesterday. We printed back up toward the moving averages. The 10-day moving average is 93.16, and the possibility of going toward that 93.35 level. Above that level, we're going to start to move toward the 40 level, and I do believe that this market is setting up a major low. I've talked about this for a while. We're well below this 200-day moving average. I don't think we're going back there. I believe 94.5 will be a target. There might be more than that. We'll see what unfolds, but we are going to see some firmness come back into Dow. This pattern has been setting up for the last couple of weeks. I've talked about how the PPMs are all starting to bottom now. PPM 3 hasn't turned up yet, but it should in the next couple of days, and this will suggest at least a 3, 4, as many as 6 weeks on the upside. This pattern should be correlated with what's going on in the stock market indexes. The final market that I'll cover tonight is gold. I discussed this in great detail in yesterday's live stream yesterday. We printed down to the 1930 level. The S1 level on a weekly level is 1919. It's possible we could still do another low here, but we may have completed this extreme so far for this pattern. Now, something that has happened, which is substantial, is PPM1 now is a minus 0.60. That is in a downtrend. So the short term is in a downtrend. We're also getting a cross of the 10-period moving average through the 21-day moving average. And this is typically a short-term low, and we could rebound back toward the 10-day moving average, which is at 1981. If we look at the market grid, you'll see the numbers that are out there for today are R1 is 1985, so we could print up to those levels. We've already printed below S2 overnight. 1932 is the low. 1939 was S2. S3 is 1922. I think that's out of the cards. We'll probably see an S2 R1 range for gold today. But as I've been mentioning, the trends on this one are broken right now. The best thing that's likely to happen is that support at 1919 will hold. We'll enter a very broad trading range, 1920 as high as 2050, something like that, 2050 from 1920. Reviewing the weekly chart on gold, this sets up the real range, and this is the numbers that I was just discussing. S1 is 1919. S3 is 2046. That's likely to be an extreme. So we've seen 2024. We went down to 1930. This is likely to be the range for this week. We're going to just waffle in a sideways pattern for the balance of the week. This will complete tonight's video. I want to thank you so much for watching. We'll talk to you tomorrow night.